Ladies and gentlemen, good day and welcome to the Birla Corp Q4 FY25 earnings conference call hosted by HDFC Securities. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then zero on your touch-tone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajesh Kumar Ravi from HDFC Securities. Thank you, and over to you.
Yeah, thanks, Ryan. Good afternoon, everyone. On behalf of HDFC Securities, I welcome you all to the earnings call of Birla Corporation Limited to discuss the financial results for the quarter and full year ended March 2025. From the management side, we have Mr. Sandeep Ghosh, MD and CEO, and Mr. Aditya Saroghi, Group CFO, and other senior members of the team. I now hand over the call to the management for their opening remarks, which will be followed by the Q&A. Thank you, and over to you, sir.
Very good afternoon to all of you. And on this happy occasion of Buddha Purnima, I welcome all of you to this call. There is a very large, I find, participation. That's always encouraging. This morning's trading in this market has also been a cause of, I think, encouragement for us. Thank all of you for your positive response. I think when the numbers do their own talking, there is very little commentary to be added. So on this occasion, unlike in previous times, I will let leave the floor to our Group CFO, Mr. Aditya Saroghi, and along with him, we have got our operating team, Mr. Rajat Prushti, our Chief of Manufacturing and Projects. We have Mr. Kalidas Pramanik, our Chief Marketing Officer, and some of our other colleagues. They will chip in, and I will come back to answer any specific overall queries you may have on the business or the outlook or the plans of the group. So with that, I hand it over to Mr. Aditya Saroghi, and after he finishes, then probably we will open up for questioning.
Thank you, sir. Good afternoon, ladies and gentlemen. While we have shared most of the financial information in our press release, there are few numbers which I would like to share with you, which are not appearing there, which I'm sure you might be interested in. For example, the total incentive that we have accrued in this year is 103 crores, of which in this current quarter Q4 we have accrued 41 crores. Our fuel cost in this quarter was 1.39 per million calories. And our total capex for the year was 437 crores. So these are some of the key numbers which are not appearing in the press release. And I now open the floor for questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you and congratulations on very good set of numbers. Sir, my first question is, you have, as mentioned, the incentive for this quarter was just 41 odd crore. Despite that, we have seen a more than 7% kind of a QOQ improvement in realization. So just wanted to understand what led this sharp of move in the realization.
So this is Kalidas Pramanik. I am talking about that realization improvement, how it has happened. If you look at in the quarter 4 across the country, mostly the price in the north region, up in east all also gone up. So that our volume also, if you look at the eastern region, has gone up. So that has resulted in to increase our realization up almost 7% in the quarter four. And also if you look at in the central region more or less remained flat. Here and there, little increase was there. But mostly the realization has come from the north as well as the eastern.
Okay, okay, got it. So it means this is a structural realization that the company has achieved, and if you can also help us in terms of currently how are the prices, and this kind of a realization is sustainable. So net, the important point is that the profitability that we achieve more than 1,000 rupees EBITDA per ton. If that's the case, then should be a kind of a sustainable number. That's the only thing wanted to understand.
So if you look at the exit,
first of all, on the realization, this is Sandeep Ghosh again. One point which we keep saying is the way we are distributed, our realization is usually a weighted average of our, more than others, and how the regional prices play out. So when we talk about, if you were to look at last quarter to this quarter, it is not always a like-to-like thing, because how the prices move in the different geographies between last quarter and this quarter could be very different. So it is not a very linear. Some lines there is a lot of background noise, please. If they could switch off, because there is a lot of disturbance coming from someone's line. So therefore, that is one factor. And secondly, therefore, as an extension of that, we are not going to hazard any guess in terms of our EBITDA, how it is going to happen, move forward, and it will be, I think, misleading, or it could be erroneous to extrapolate the EBITDA in the subsequent quarter basis what has happened in Q4.
Yeah, and just to answer your question, there are no one-off. There are no one-off incentive for any other one-off. So it's purely, other than the incentive of 41 crore, it is purely operational number that has been reported.
Great, that's great. Yeah. Just a 2-3 data points, if you can share: Mukundban volume, lead distance, and then also if you can help us the cash flow. There was a 346 crore working capital inflow, which is from the other financial asset. If you can help us, what was that?
So Mukundban volume was for this quarter was 750,000 tons. Lead distance was around 450 kilometers. And what is the third one? We got some incentive dues, so that probably would answer your questions about the change in current assets.
Sir, you said lead distance was 350 or a 450?
For Mukundban
450, overall 350.
Okay. Got it, sir. Thank you and all the best, sir.
Thank you. The next question comes from the line of Siddhant Dunn from Goodwill Warehousing Private Limited. Please go ahead.
Yeah, hi. I wanted to know our long-term strategy for our jute business, because if you go and see last 10 years, there's been very little profitability, and it continues to be a drag on our ROCE. And would we take any impairment, because it takes a very large part of our block?
I wouldn't say so. In fact, I would, in a larger context of the entire, group we are sitting here, jute business I consider to be for Birla Corporation a certain advantage. It gives us a very distinct and unique advantage. When you find a lot of our peer group companies are trying to make forays into adjacencies and new businesses, we have already got with us at existing asset competencies of a business which has eminent possibilities of scaling up and increasing profitability, especially in the current context when geotextiles and eco-friendly fabrics are becoming more in vogue. The point I'm trying to say is that, let's say, if we were to today try and foray into another adjacency, new businesses in the allied sectors, like some of our peer group people have done, the amount of time it will take us to scale up to a turnover like what we have in jute as on date, and what is the potential of increasing jute from its current level to a higher level, is far higher than what somebody else entering a totally new field would take to generate that kind of a top line, as well as an equivalent bottom line. I don't want to specify numbers. So if there is an X amount of top line people are generating, let's say in the course of 3 or 4, 5 years, and also a bottom line of Y, the amount of time they will take, efforts, investment, management, intensity, and the rest of it, we have got a ready-made opportunity in our jute business, and because particularly jute is now poised for growth is what we believe. Here we are the only jute company. If you were to look at it, we are 100 plus year old jute mill company, one of the original jute companies. Rest of the people who are there, most of them have either come into the business much later, taking it over from the foreign jute companies which have moved out and taken them on, and their whole mindset about the business has been very different. And there are only therefore a very few players today who are taking a much more futuristic and enlightened view of the jute business to move up the value chain with value-added products, with new R&D, and tapping the export opportunities, the export market, as well as in the domestic markets, moving away from the traditional dependence only on government orders which are subsidy-led, etc., etc. So we believe jute has a future, and we are therefore, and we have commented on that in our press release, that we are now putting in a different management focus into the jute business. It's early days for us to speak about it. We have had a revamp in the management structure of the jute business. We are approaching it in a much more integrated manner, not treating it as at an arm's length as a different business, which is handled differently. We have now integrated it, increasingly integrating it into our main operations, so that it gets that kind of management focus from our E-team and the central management. We are looking aggressively at what are the scope of increasing not only efficiencies in the existing business, but how, as I mentioned earlier, to move up the value chain. This company, some of you would not know, had in fact were pioneered years ago on many jute value-added products which we had done, but probably we were then ahead of the curve, ahead of times, and it did not commercially, it did not succeed. But we are very encouraged to see some of those products, like using of jute, say in automobile upholstery and or other kind of jute product mixed with other laminates, etc. All of those things are making a huge comeback. And internationally, there are even more possibilities. So we are looking at jute in a very, very new way, and we don't see that as a drag at all in our business. And being part of the Birla Corporation structure, we believe we should be able to nurture and grow it further. And because of both our emotional connect which we have, if you really speak Birla Corporation, that is the mother business. And not just the Birla Corporation, of the entire, larger Birla fraternity. That is where it's all started. And we therefore have a very strong, both sentimental as well as emotional connect. And we know that business, and therefore for us, there is that will. We have not just come in subsequently, taking over business from some other company which was leaving the field for other thing and then treat it as a short-term opportunity or a trading opportunity. We have long-term stakes, and we have been around for 100 years, and hopefully we would like to be in this business for another 100 years or more.
That's wonderful to hear. But is there some kind of, let's say, 5-7 years, once the business is nurtured, the kind of margin expectations that you have, and when can we expect double-digit ROC in the company?
We will mention, as we said, it's early. We have made some indications. We would not like to, if you read this time's press release there itself, we have commented a few things, but it's very early days yet. We are, I repeat myself, we have put a new management team. We are taking a very new, a different look at this business, and I'm personally confident that, like you have seen a lot of turnaround in the company's main cement business over the last 10 years, you will see a transformation in the jute business also in the times to come.
Okay, one last question before I join the queue. We also have a lot of equity investments outside the MP Birla Group, including in the largest cement player. So, considering the valuation difference in both theirs and ours, would you consider selling those equity investments to do further cement capex?
See, those are non-strategic investments for us, but currently we don't have any plans. We feel that we have got enough internal accruals to cater to our capex requirements. So as of now, we don't have any immediate plans to sell those investments.
Those will be financing decisions at a particular point in time. As Adit mentions, it's a non-strategic investment. So it is not going to be part of our growth strategy. We'll take a call on it when we have to, as a part of our financing decision, and at the right moment. We have to see when we're getting the right value out of it or not. We are under no distress or pressure to sell that to fund our growth.
Okay, that's great. Thank you so much.
Thank you. Ladies and gentlemen, in the interest of time and fairness to others, we request you to restrict to 2 questions per participant and rejoin the question queue. The next question comes from the line of Jyoti from Nirmal Bang. Please go ahead.
Good evening, sir. Thank you for the opportunity. Great set of numbers. Can you hear me?
Yeah, we can of course hear you, Jyoti. Welcome.
Yes.
The first time I think you're speaking in any of our con calls, so.
So, the entire industry has done very well. We have done almost like, if the numbers are correct, we should be doing YOY 10% growth. So, which means we are in line with industry. EBITDA button also, almost everybody would be doing some 250 plus. Now in quarter 1 also we expect similar numbers. Will this sustain in second quarter, third quarter and fourth quarter when we're going to have such massive capacity coming in? Do we expect similar consistency of numbers going ahead? I mean, considering I don't see any major disruptions happening in the economy so far, whatever it was, wo ho chuka. How do you see things going forward for the industry on the whole? And on the consolidation part, do you think going forward prices are going to stabilize because of consolidation?
Jyoti, as you have seen us over the last 2-3 years, we try to do what we think is right for our business. We are not that large to influence industry trends or basically make those predictions. We have a clear strategy, and we try to stay to that and stay close to our promises to our stakeholders as well as our investors, without getting carried away by what's happening around us. And because those are things, for there are other larger players who've got different sets of priorities for them to look at it. Our job is to manage our existing businesses not only profitably but in the most value-adding way, create value for our all stakeholders, not just investors and shareholders, for everybody. We have a commitment there because we are here in the for a long term. And secondly, now that we are undertaking, we have committed ourselves for expansion and a new phase of growth, we would like to deliver that in the best possible way. So we do not like to get deflected on day-to-day basis. Whatever will have to happen in the larger context, it will happen, and there are bigger people to take care of that. We would like to keep our head on our shoulders and try and deliver a reasonable performance quarter on quarter.
Okay. Thank you so much, sir, and all the best. I wish you only progress and do well going forward.
Thank you very much, Jyoti. We appreciate your wishes.
Thanks.
Thank you. The next question comes from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah. Namaskar, sir, and congratulations to the entire team for very, very, very good set of operational and financial set of numbers. Firstly, Sandeepan sir, a question for you, sir. We are targeting a capacity of 27.6 million ton. So if you could just articulate to us on a 3-year basis, what would be the likely capacity addition? And also, Saraogi ji, हम कितना capex करेंगे इस वित्त वर्ष में?
So, since you got my name wrong, Saket, despite living some 3 kilometers from where I'm sitting, I will pass on my question to Saraogi ji, whom you got it right. Answer both the questions to you.
Elaborate on the capacity part.
Yeah, good afternoon to all. I'm Rajat Prusthi. As you rightly mentioned, our capacity will go to 27.6 million ton by FY29. But if you see in maybe by December 27, Q3 FY28, we should be reached with Mayer Line 2 and 2 grinding setups, Prayagraj and Gaya Phase 1, which will add on our capacity to roughly 25 million ton.
Sir, for the coming first financial for year 26-27, what kind of then additional volumes we will be going through? I just missed your last point.
This 26-27, you can say that our capacity will remain only addition of 1.4 million ton, which is going on presently on time, Kundanganj Line 3. That will be commissioned, and that will continue to ramp up that volume to 21.4 million ton.
Okay. Sir, I'll give you the capex number for the current financial year, and also, sir, in the cash flow as well as in the non-current assets, we have given 100 crore rupees intercorporate loan. Can you please explain to whom and the rationale for the same?
So in terms of capex for this year, we expect the total capex to be around 1100 crore, including the project capex. So that is the number. And 100 crore is the intercorporate deposit we have given to another company at arm's length.
Another company, sir? Didn't get the name.
On an arm's length basis.
Sorry, sir, I did not understood, sir.
We have given it to another company on an arm's length basis. It's an intercorporate loan. We do not want to specify any names, etc. Here.
Okay, sir. And sir, for the coal mining part, sir, if you could just give color in the press release, we are also not mentioning about offtake from our coal mines and the targets which we have set in terms of the self-sufficiency which we will be achieving about the Bikram coal and the other coal mining activities that we have initiated.
In terms of coal mines, Bikram coal mine we are expecting to start maybe by Q3 of this year we are expecting to start that coal mine. But meaningful production will start from next financial year only. And as regards the other coal mine, which is Birla, that we expect to start only in FY28.
Okay.
Saket,
Okay.
you see that there is no salvation in just saying what is the self-sufficiency. Coal mine, captive versus purchase will all depend always on the cost benefit, the cost equations. Sometimes you may actually decide to mine less if your cost of mining is more than your purchase of coal. So there is no, as I said, there is no absolute virtue in only mining your own coal. So that is a call we'll take. Our job is to keep the fuel mix in the most efficient and most economic manner. So to that extent, there is no color to add to coal mines. Coal is always black. It will remain black and white.
Yes, sir. I'll join the queue for 2 more follow-ups, sir. And sorry for the name, Sandeep, sir. I'm extremely sorry.
No problem.
Thank you. The next question comes from the line of Pushkar Jain from Milli Capital. Please go ahead.
Yes, sir. Congratulations on good set of numbers. I just wanted to know the trend in power costs, as we have seen a significant decline in power costs.
I'm sorry to interrupt you, Pushkar. If you could please use your handset and ask your question once again. Thank you.
Hi, sir. Congratulations on good set of numbers. My question was regarding power costs. As we have seen a meaningful decline in power costs, I just wanted to know the trend. How do we see it going forward?
So power and fuel costs combined together, you can see the trend already. It is in a going trend, downward trend of 1,000 rupees per ton. And of course, that depends on the coal prices, as rightly said by Aditya sir in the beginning of the conference, that our fuel cost is 1.39. And we are working on a different models that is continuously see that what best fuel mix we can do so that we can optimize our cost. And parallelly, our green power also, of course, now it is around 25%. It continuously, we are working on certain projects, both in solar, hybrid, and renewable power of WHRS also. So we have planned many improvement projects, including additional capacity. So going forward, you can see that our green power is going to increase in next 2 years' time to around 36-37%. So power, obviously, it will be remain, and if we see only electric power, then it will be remained almost similar and better than the today's number.
You should see a gradual declining trend in terms of power cost.
Okay, sir. Got it. Thanks a lot.
Thank you. The next question comes from the line of Siddharth Gupta, an individual investor. Please go ahead.
Yes, sir. So I wanted to ask about the Chittorgarh mining case. There was recently a news article stating that the state government is considering ban on mining within 10-kilometer radius to Chittorgarh Fort. So I wanted to understand what is the update regarding this.
We have no such information on this. That statement was made, but we have not found any veracity, and we'd be surprised if such a position is taken, because this is contrary to anything which has been stated in the past, and the case has been progressing in a particular manner. There has been certain studies which were prescribed by the Supreme Court. The studies have been completed, and the reports are at the disposal of the court to consider. So we shall wait. We don't see any material change from whatever the position was earlier.
Okay. And so, if does the company have any alternatives if such a situation would arise?
That's a very hypothetical question. We are not even considering that as a situation just now, because there is no reason to think anything like this. Case, as you know, has been there for a very long time. All aspects of it has been gone into. So there is really nothing to comment at the moment on that, and there is therefore nothing to talk of an alternative just now.
Okay. Okay. And just one last question. So I wanted to know what is the current realization compared to Q4 average, if you can share that.
This quarter, you're talking of the current quarter?
Yeah, ongoing quarter. I'm talking about Q1 FY26.
Almost, in ongoing almost remains same. There is no much variation.
Okay. Thank you so much. Thank you.
Thank you. The next question comes from the line of Vipul Kumar Anupchand Shah from Sumangal Investment. Please go ahead.
Hi. Thanks for the opportunity and congratulations for very good set of numbers. Mr. Sarogi, would you repeat the Mukatban volume for quarter and year, please? I could not listen it properly.
750,000 tons.
Sorry?
For the quarter. 750,000 tons for the quarter.
And what was the yearly volume, sir?
24.5. 24.5.
22.5 million approximately.
And sir, we have taken another expansion. So what will be the debt trajectory over next 2-3 years? Our debt had started coming down meaningfully, and again now we are taking a debt-funded expansion route. So can you comment on the debt trajectory for next 2-3 years?
The debt in absolute terms, if you see, definitely there will be some increase in the debt. But as we have always maintained, you should look at our debt in terms of debt to EBITDA metrics. And while we have always maintained that as a policy, we would always like to remain below 3. For the current financial year, the debt to EBITDA ratio we are expecting to be well below 2.
Okay, no, I'm talking about next 2 years, sir.
So next 2 years also, I don't see my debt to EBITDA exceeding much beyond 2.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next question comes from the line of Amit Agija from 8G Hava and Company. Please go ahead.
Good afternoon, sir. Am I audible?
Yes, please.
Yeah. Thank you for the opportunity, sir, and congratulations for the good set of results. So most of the questions have been answered. Just a request, sir. The investor presentation has not yet been updated on the stock exchange.
We don't come out with investor presentation. We always come out with a press release which has been uploaded.
Okay. Thank you, sir. Thank you.
Thank you. The next question comes from the line of Girija Shankar from Yes Securities. Please go ahead.
Hello, sir. Good afternoon. Thanks for taking my questions. Congratulations for a good set of numbers. So I have a small bookkeeping questions. Just wanted to understand the total capacity expansion what we are going to do for Prayagraj, Gaya, Aligarh, and Kundanganj. So Kundanganj is 1.4 and Gaya is 2 million ton. Prayagraj and Aligarh number I want.
No, Gaya is 2.8 million ton in 2 phases, and Aligarh is 2 million ton. Prayagraj is 1.4 million ton.
Aligarh is, sorry?
2 million ton.
So I'll just repeat. It is Kundanganj 1.4, Aligarh 2 million ton, Gaya 2.8, and Prayagraj is
1.4.
Okay, 1.4. So including this is 7.6. So for this 7.6 and including here clinker, the total capex we are estimating 4,385 crore, right?
No, 6.2 million ton because Kundanganj line 3 already the job is going on, so we are in the process.
4759 is the number including Kundanganj line 3.
Yeah.
Okay. And is there any clinker sale we did for this quarter?
Very marginal, something would have been there.
30,000 tons.
It's hardly marginal.
And there is no one-off in our top line growth, right?
No.
Okay. And this Prayagraj, Gaya, Aligarh, these are the 3 grinding unit which is expected to come by third quarter of FY28. And Kundanganj.
Third quarter by by calendar year 2027, we are expecting Mayer line 2, phase 1 of Gaya Prayagraj, and of course Kundangan line 3 is expected in the second quarter itself.
Okay. And Kundanganj is first quarter of?
Second quarter of this financial year.
Okay. Okay. Thank you, sir. Thank you very much.
Thank you. The next question comes from the line of Moksh Ranka from Aurum Capital. Please go ahead.
Hello. I wanted to know your total clinker capacity and your total limestone reserve in metric tons.
So total clinker capacity is around 13 million ton as of today, and plan for another 3.7 million ton. That is the Mayer line 2.
Okay. And limestone reserve?
We have got sufficient limestone reserve. We can't give a specific number as of now.
Yeah. Okay. That's it from my side.
Thank you. The next question comes from the line of Uttam Kumar Shrimal from Axis Securities Limited. Please go ahead.
Yes, sir. Good afternoon. Thanks for the opportunity and congratulations on the good set of numbers. Sir, in your press conference, you have mentioned about RMC business. So just wanted to know how many RMC plants we are going to set up this year. What kind of capex we will be incurring in the RMC business, and what would be the margin in this particular business?
This is early for us to talk about it. We are still firming up our strategy. We have made, a beginning in UP. We are finalizing our strategy. Hopefully, by next quarter, we should be able to give you a clearer picture on this.
Okay. And the last one, so if you can give volume guidance for FY26, that will be very helpful.
We expect the industry is expected to grow maybe between 6 to 8%. We should be in line with industry, if not better.
Okay, sir. That's all from my side, and all the best to you.
Thank you very much.
Thank you. The next question comes from the line of Patanjali Srinivasan from Sundaram Mutual Fund. Please go ahead.
Congrats on a good set of numbers, sir. Thank you for the opportunity. I have a couple of questions. Sir, previous quarter end, we were a little bit watchful in terms of our commentary because we said that this whole Prayagraj event was going on and pricing environment was very benign. But when we look at our results and the numbers that we have shown, things seem to have turned around in a very quick manner. So could you just tell me one or two key things that came in as a surprise or came in because of our efforts, which was different from what you had expected initially?
First of all, we are always conservative but realistic. And if you said that's something I hope you will give us credit for, because from every quarter to quarter, we have always tried to take a very realistic view of things, and so therefore it was not that we were exceptionally pessimistic or anything when we spoke at the end of the previous quarter. And what we talked about that time, the Kumbh Mela, and if you're referring to that indeed affected our operations in central India, because for a long time eastern UP was inaccessible, and because we feed Bihar largely by rail, but not largely, entirely by rail, our rail movements were also affected. But what I think happened, and which I wouldn't say it surprised us, but what we have done very well is, despite these constraints and everywhere else, the way both our manufacturing and the sales team have operated, we have operated at a very high level of capacity utilization not only in in our old markets, but even in our new markets like Mukutban. We have, I think, exceeded our own internal expectations of what we have done out there. So therefore, our volumes have been definitely what we would have taken a realistic or a conservative estimate of that has gone up, and wherever we have had uptick of prices, which is more than, not as Mr. Pramanik was saying, had been a very depressed scenario for 3 quarters, and North showed an improvement in the fourth quarter. East showed an improvement there. So those came in handy for us. There was a slight improvement also in the Maharashtra area, which was earlier, for a long time it had remained depressed, but post the elections, everything stabilized in Maharashtra and that picked up. So all those were tailwinds which we got, which might have given us a little ahead of our, and of course fuel prices, etc. were benign, input costs were benign, so that together. So no big surprises per se, except, as I said, that our people exceeded, I think, our expectation in terms of the operations. And that's been huge, because when you have a capacity like ours, which is not very large, if you see that if you have to do it on a sustainable basis, maintain dispatches and sales from day one of the month to the last day of the month, that calls for tremendous coordination, planning of operation between sales, marketing, logistics, and the rest of it. And that's where I think we did very well.
Sure, sir. Sure. Sir, and just a related question. So when you say pricing improvements happen in terms of demand also would have played a factor. So if we operate largely in 3 regions, so if you could tell me which region, what were the rough increases in prices that we were able to see at our organization?
I don't think we'll get into that specific. The overall market prices you are aware of. As we mentioned, that in the north.
Okay. Just directionally, where would we have seen the highest increase in price? Something like that, if you could give me a direction.
North and east. East was probably higher, but our presence in east is not that high. But we have, within that we have done well, and north, of course, was good. Especially in the initial months. Thereafter it plateaued, but initial months north picked up quite a bit from being in a fairly depressed state in the third quarter.
Sure, sir. So just last question for Sarogi, sir. What would our net debt absolute number for 26 be, and capex for 27 also be, if you could help us with it?
As I said, net debt is expected to increase in this financial year because of the capex program. As of now, we expect it to be in the vicinity of 3,000 crores. But in terms of net debt to EBITDA, definitely it should be definitely below 2 for this financial year.
Sure, sir. And capex for 27, sir?
Total capex, I don't have that number. For 27, I don't have the specific number for next financial year.
Sure. Thank you so much, sir.
Thank you.
Thank you. The next question comes from the line of Vipul Kumar Anupchand Shah from Sumangal Investment. Please go ahead.
We will close after this. It's been this is the last question.
Hello?
We are taking.
Yeah, thanks for the follow-up. Sir, what type of volume we are expecting from Mukutban for this year?
We are doing a steady ramp up. So we have been operating close to 80% capacity utilization. Next year we would be probably.
Q4 was around 78, and next year for the year as a whole we
will exit 85.
85.
We should exit at 85.
Okay, sir. Thank you.
Thank you very much. Rajesh, shall we close the call now, because others are a reputation. We have already answered questions for Daulat and Kapoor and Sons.
Sure, sir. Yeah, I think that's all, moderator. Sir, if you have any closing comment, after that we'll close the call.
No, I think thank you very much. We can only thank you once more. We are, I think confident, and now we are setting our heart and minds to basically delivering not only on the existing thing, but all the expansions we have committed, the new projects. We'll try to get Kundanganj, the new line, operational. and everything allied to that, including what we discussed about jute business, RMC, and the rest of it. Hard work ahead, but we feel confident after the delivery of last year. Thank you.
Thank you. Ladies and gentlemen, on behalf of HDFC Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.